Let's take a gander at this week's top stock picks or top opportunity picks in the investment arena, because you have an ETF, Eric.
That's right. IAI, it's an iShares broker-dealer ETF. This is a number 2 ranked ETF. Focuses on companies like Goldman Sachs, Intercontinental Exchange. So you get a little bit of diversity in terms of the financial service companies that you're getting. Has about 22 stocks in its portfolio. And both of these segments that it focuses on, the exchanges and the investment managers, they're both in the top third for the Zacks industry rank. So you're going to get some pretty strong ranks. And the momentum's been very good in this name too. This space has been up over 50% in the past year, and I like this name to kind of continue higher going into earnings season. And a lot of these financial names kind of lead the way in earnings season. So this could be a name to watch as we start earnings season here over the next couple of days and weeks.
Okay, Brian, you've got Gogo Inc., but it has nothing to do with dancers on a stage, right? It's a wireless company.
Unless you want to start dancing for us.
No, thank you. No, thank you. A wireless company.
Yeah, it's a wireless company now. They provide access to the internet when you're on a plane.
Oh, okay.
So, Terry, when you're
more specifically, okay.
Yeah, when you're flying around, going from place to place throughout the country, you can access the internet on, Delta or American or any number of different carriers. You're going to be charged $6 an hour to check your email. But I know you get a lot of important emails, so you'll probably want to do that. They also have plans that are, $15 for 3 hours or something like that, and then all day or monthly passes as well. The idea is that people want to stay connected, and a lot of people are flying a lot more than before. So this is kind of a neat opportunity here. I think the stock has kind of pulled back from its highs recently of around 35. It's sitting around 22 right now. I think now is probably a good time to take a look at Gogo.
But what about that rule that these airlines have about keeping your devices turned off while you're in the air? How does that work with this?
So certain devices, you're going to have them on airplane mode. So like your tablets or your phones or anything like that, they're just not going to have cellular connection when they're in airplane mode. But when they're not in airplane, or when they are in airplane mode, they can pick up the wireless signal from Gogo that is on the plane. So that can enable them to, you check your email even as you're taking off and/or landing.
Right.
So you can do that. And then they're talking about Delta is saying you can't use your cell phone on the plane.
Right.
Well, that's fine, but your tablet or something like that, you can always then connect via Skype or any other internet service for a VoIP connection, and you'll still be able to talk to someone just as you would on your phone, but you're just going to have to do it a little bit differently.
Okay, got it. You have Maiden Holdings, has nothing to do with maidens.
Nope.
But insurance.
Insurance company, yeah. Yeah. MHLD is the ticker symbol. They are a specialty property and casualty reinsurer, which is they're essentially an insurance company for an insurance company. So you have they focus more on small to mid-sized insurance companies, but if they want to manage their risk, they'll buy a policy from Maiden Holdings. And if you look at the industry, it's in the top 11%, the property casualty industry right now. And Maiden Holdings, the Zacks #1 rank within that. They've delivered 3 consecutive positive earnings surprises. Analysts have raised their estimates over the last several months, sending it to the Zacks rank of 1. But if you look, it's also a very good dividend play. They pay a dividend that yields 3.8%, so a very solid yield here. And a good value play, too. They traded just 8 times forward earnings. I think a reason for that discount is if you think about an insurance company, they take in premiums and usually invest that, but it's usually in fixed income. So they have a ton of bonds on their portfolio. Well, as you know, as interest rates rise, bond prices tend to fall. But I think that fear's a little overblown here. I took a look at their investment portfolio. Their average duration is just 4.5 years, which means basically their interest rate risk isn't that terribly high. So, if you see another 100 basis point increase in interest rates, their investment portfolio might fall by 4.5%. Not terrible. For 8 times and a 3.8% dividend yield with a good earnings momentum, I think that's a risk worth taking.
Okay, thank you all for that. Don't forget, more stock picks and stock-related articles on our website, Zacks.com. If you're not there already watching this video, get on over and check them out. In the meantime, with everyone here, I'm Terry Ruffalo.